Alright, here we go. Stocks by the numbers, welcome back. I wanted to do a quick video here as per request on Oscar Health, OSCR, listed here on the New York. This is a healthcare stock, and if you recall, I said many months ago, in my opinion, I would steer clear of any pharmaceutical, any healthcare stocks, even a lot of food and beverage stocks, even though I know I recently spoke about a descending wedge, potential breakout on CPB, Campbell's. But overall, we're hearing more and more news. We recently heard about, certain dyes and whatnot that have to be taken out of foods. But overall, we know also now that there are new legislations coming to light that could potentially toss a bunch of people off of Medicaid, which apparently could impact a stock like this, Oscar Health. So overall, in my opinion, if we look at the numbers here, we can see that they had a pretty decent quarter last quarter. If we look at the earnings here, that came out about a month ago, 92 cents a share. Analysts expecting 79 and a third. Really nice beat. Revenue comes in at $3 billion, above estimates of $2.85 billion. So technically on the number side, again, if we look at it like this, the growth of the business, of the overall company, has been phenomenal. But my biggest concern is that not only do we potentially drop back into this long-term descending wedge, but also, again, the fact that if some people get tossed, then it could impact Oscar Health's bottom line. Tax bill brings big changes to Medicaid, insurers, pharma. Is a Barron's article, came out about 2 weeks ago. The House spending bill that passed in a nail-biter vote would bring dramatic changes to the Medicaid program, including new work requirements. Shares of managed health companies that offer Medicaid plans, including Centene, Molina, and Elevance, were down. The bill also has a little notice change to the Medicare price negotiation program created in 2022 by Biden that would be favorable to drug makers and seems to contradict some of Trump's administration's recent rhetoric. Other changes in the bill would affect companies like Oscar Health that offer plans on the insurance exchanges created by the Affordable Care Act. The details are highly technical, but Oscar shares were also down Thursday morning. So it seems like they're just overall going to have less people under coverage. Need to work at least 80 hours a month or 80 hours of community service. But the bottom line is, if the bill passes the Senate and is signed into law in current form, millions fewer people would be on Medicaid. It's going to reduce Medicaid enrollment, said analyst at Raymond James. Expects a 5 to 7% decrease in Medicaid enrollment. Right? So if that is what's coming to pass, and it could affect, again, other healthcare stocks, but also Oscar Health specifically, then yeah, in my opinion, I wouldn't be a buyer. But again, that's just me. Obviously, going back the last couple of years here on these big dips, when the stock was even up here at like 7, 10, 12, in my opinion, it made sense, right? We continued to run up to almost $24 there, $23.79, and we've been dropping ever since. But even if you look here, we go back, look, this is November. I mean, this is essentially week of elections. I mean, they also had earnings. They missed on the EPS, so they dropped. But going into elections even, you can see stock was like 17, 18 a share, right? We drop, pop back to it, drop again, stay down, pop back up to just about where it was, and then we drop back down now. So you can tell in my eyes that it seems rather weak. And also as of late, it looks like we have a lot of sellers here with the volume coming in. But also we can see that going from the bottom here of this breakout of the wedge that happened going into recent earnings. You can see I drew out a support trend line there connecting to those bottoms. April 21st, April 25th, right? Coming up, cutting across. And you can see that it's been fighting to stay above this support level. Yesterday, it had a really nice day. Looked like it had a nice bounce and was on its way to the 20-day moving average. And now you can see today, look, we opened and we rejected off of the support trend line. And now we closed at 14.15 up to 14 and a quarter after hours. But technically still below this support trend line, which means we can come back down to here, which would be about 13 and 2/3. And then, of course, we could potentially drop back into the center of this wedge, which would be about 12 and a third. So overall, over the years, I mean, it could weather this Medicaid storm and, you know, come out with flying colors. In my opinion, I would try to buy this, again, somewhere in the middle of this wedge if I could. Maybe 11 and a half, even 10 and a half if I could catch it at the bottom of the range. So, again, that's just my 2 cents, but technically, the company has been growing very nicely over the years, goes net income positive for 2024. Revenue up to $9.18 billion. They brought in roughly $25 million in change off of that $9 billion, going net income positive. And again, last quarter, we can see a really big jump up here, quarter over quarter, going from $2.14 billion up to $3 billion. Net income $177 million this time last year. Now it's up to $275 million. But again, this may just be almost like they say when a light bulb burns out, right? It's the brightest right before it burns out, and then it goes dead. So in my opinion, I actually think it's holding up kind of well based on what's been in the news, and I think it's ready for another pullback. But again, that's just me. This is just my opinion. If you disagree, obviously let us know in the comments section. But $3 billion market cap, if we look at it like that, we could say, hypothetically, that it's undervalued, right? Because they brought in 3 times that revenue last year. But we're trading over 50 times our earnings right now, which of course could be viewed as a little high, especially if money's flowing out of this sector. The beta, though, is very nice. Beta's here at 0.34. Again, the beta volatility of a stock in relation to the overall volatility of the market. So this stock is roughly 1/3 as volatile as the market, which is good over the long term. Debt here, only about $300 million. Drop in the bucket. Okay, we come down here. Insurance reserves this time last year, $1.25 billion. We're up to almost $1.5 billion. Claims, though, were about $243 million. Now we're down to only $187.5 million, which obviously is better for their bottom line. And the premiums earned, you can see we were at low 2 billions, excuse me, and we've been slowly inching up now as of last quarter, $3 billion on the premiums earned. So again, a lot of these fundamentals are technically moving in the right direction. But if we do drop that hammer and they start to see, as the analyst said, a slight pullback in the Medicaid enrollment, then I personally don't have very high conviction right now at this moment. I'll put it that way. But technically the equity growing nicely. Again, high 100 millions, had the dip here to 800 million. Then we bounced back to above 1 billion. And it's basically had a slight pullback 2 quarters ago. In Q4, it looks like that's their weakest quarter, and then boom, we bounce back to the strongest quarter, it seems, in Q1. Again, equity up to 1.34 billion, bringing the book value, again, slowly climbing. Book value now, 526. So again, a lot of these fundamentals are moving in the right direction. So if you tell me you like it, you're going to add to it on a dip over the long term, I really can't fault you too much for that. But again, I just want you to understand the risks involved. Because if it does happen that they do start to see that decrease in enrollment, believe me, the stock's going to take a hit. 50 times earnings, a little less than half times sales, 3.5 times cash flow, a little less than 3 times book. We were up to 4.5 times book at one point. Enterprise value, again, what another business would be willing to pay for this company. Enterprise value right now sitting at about 10% higher than the current market cap. So again, not necessarily the biggest metric to use, but, you know, might be showing you that the upside is capped potentially. Our return percentages went positive. Operating margin up to 9.75%. That's the highest it's been going back about the last 8 quarters. Same with the net margin percentage here at 9%. Loss ratio, almost the lowest it's been actually. It's 75.4. We did see 74.25, but technically sub 80. Looks like that's been kind of the mean average going back the last 2 years roughly. expense ratio pulled back as well. You can see we jumped up to above 20%, holding right around there for about the last 4 quarters in a row. Now we're down to about 16.33%. So this is what I mean. A lot of these metrics are moving in the right direction. You just have to pick your spots. And in my opinion, something like Oscar Health, again, with the new legislation, I would kind of personally wait for the dust to settle. I would wait for the storm to pass, and then I would consider stepping in and taking a position. But I do like it overall. I really do. We don't get dividends. EPS has been solid more times than not, right? 6 beats over the last 8 quarters, not bad. Revenue again jumped up to $3 billion. 5 beats in the last 8 quarters. That's not too bad. And you can see even, look, moving forward, they're expecting a slight pullback, right? Because if you just broke up to $3 billion, you'd be looking for 3.3, $3.5 billion this time next year, right? Look at the current forecast, though. $2.88 billion. So that's why, again, I mean, we know anything can happen. They can hold the $3 billion. They can post 3.1 next quarter, right? And be on the up and up and completely change the whole narrative. But in my opinion, I think they're accounting for 2, 3, 5%, whatever the figure may be. They're accounting for that pullback in enrollment, in my opinion. Overall, for 25, you can see estimates jumping up to over $11 billion in revenue, then down to sub $11 billion in 26, and then taking about a 30% leg higher in 2027. So again, over the long term could be good. You just might have to deal with the short-term volatility in some of these drops, based on what Trump is doing, what RFK wants to do, revenue out of the U.S. And again, on the technical side, really, you want to try to see it, hopefully, regain this support trend line here. So tomorrow, we're looking at about 1445, it looks like, kind of in that area. You're going to need the stock to get back above this fib here of 1437, and then back above this support trend line, and see if it can climb up and retest this 50-day moving the 20-day moving average at about 1560, we'll call it. But again, if we happen to drop and break, then the next stop should be, about 1360. And then maybe kind of right here, kind of middle of the range, right around this cutting across trend line here, about 12 1/3. And again, this trend line is going from the bottoms in 22, right before the ball dropped, going into 23. And I brought that up, and you can see that's touching that recent bottom as well, where we drew our shorter term support trend line. So shorter term support trend line, longer term support trend line, long term pattern descending wedge, right? So we have to see if it's a premature breakout here after earnings and we're going to bounce and climb back up to the top of the range, or if we're going to break now again with all the news headlines and we're going to drop back in and come back down here to the wedge and wait for next earnings potentially to climb back up and out. I just want to also check recent headlines real quick. I'll let you go. Check the 10Q real quick. See, increased 43% in revenue driven by higher membership, but that may plateau. That's my concern here. But technically, a lot of things are on the up and up. Again, 177 million last year, 275 million net income this year. EPS, membership, total members rising to 2,039,000 compared to about 1.44 million in the same period last year, primarily driven by the individual and small group segment, which saw a membership increase to 2.02 million from 1.386 million. So it does look like people are opting for the Oscar Health plans, but again, I don't know if I would trust it. And again, it's the sector overall, not necessarily this stock. But again, I've been saying that for months. Stay away, in my opinion, from insurance companies and a lot of these pharma stocks. But I know things are trending, United Health, and people stepped in, they bought the dip, they made some money. Like, I understand. That's what I mean. As a trade, you do whatever you want to do. If we're talking as a long-term investment, again, I personally just don't feel comfortable Reaffirm guidance. Total members up big. I just want to double check some of these numbers, because that's pretty much all I have to say. That's up slightly. Total assets up about $1 billion. Liabilities up about 700 million, so we're slightly outpacing that. Equity up about 30%. Slightly smaller expense for stock-based compensation. Yeah, everything's pretty much up and up. Earnings up, depreciation down, stock-based compensation down. Radio silence for you guys. All right. I was looking to see two. Here we go. Well, this was a while back. Equal weight. Price target from 20 to 16. I still think that might be a little high. When your price target average almost 19. Right now we can see analysts kind of mixed. We have 2, 4, 6, 8 analysts covering the position, 2 giving it a strong buy, 2 giving it a buy, 2 giving it a hold, 1 sell, 1 strong sell. So that's why we're kind of on both sides of the fence here, which tells me, in my opinion, analysts aren't really sure what's going to happen. But again, as I always say, in my eyes, they may put out the numbers to back it up over the quarters. But right now, based on the current news cycle and what could potentially be coming to the insurance, the healthcare sector, the pharma sector, in my opinion, I wouldn't be a buyer. But listen, if you like it, of course, you know I wish you the best. I hope it gets back up and spikes up and makes you money. But that's just my opinion. If you agree, disagree, of course, let me know down in the comments. Curious to hear your thoughts about this one, but that's pretty much all I have to say about Oscar Health, so I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm quick to reply. Thumbs up, algorithm, right? You guys know that helps out. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Blah. Thank you. Had a crack in the throat. Thank you for your time. Have a good day.